Good morning, small players. Welcome to another pre-market live stream. This morning, the scanner is quiet, just like yesterday. We talked about it in yesterday's stream. If you haven't seen it, please be sure to watch it. You know, the morning being quiet doesn't necessarily mean anything. It's still only 8 a.m. There could be news dropped at 9 a.m. that can make some more stocks move. There can also be some stocks that make themselves the obvious ones right on bell. So I'm not that concerned, if the morning is slow. Actually, the morning is slow. Sometimes the day ends up being easier because there's just one stock that explodes on bell and makes itself the obvious stock. So then everyone's trading it. It actually ends up being a very easy trading day. Yesterday sort of worked out like that. It ended up being a great day for us. So I'm not that concerned, but it's going to make this stream a little shorter because there's not that much to analyze. So maybe we can talk a little bit about trading in general also, just to give some more value this morning and to clarify certain things for people that are maybe not trading with us in the chat room or just starting to trade in chat room and have some questions about the way we trade. In these streams, all we do is really identify levels of support and resistance so that we can determine best entries and exits, right? That's all we're doing in these streams, to go into more detail on how we actually trade them, how we find them, what the strategy is behind it, all of that. We cover that in our courses. We actually have a Halloween special right now where all courses are 30% off with the code Halloween. So if you just go to the link in our bio, smallplayers.com/programs, you can click the first link, Halloween special, and grab the courses for 30% off. Now, with that said, let's run through our scanner. The first one is GFAI. We actually traded this morning. It's a 17 million float, so we like that. It has some pretty obvious levels of support and resistance. Well, I guess these are a little more obvious on the 1 minute chart, but 3.6 is a big level. 369 is a big level. I guess suppose 370 we can call it, a psychological number, a full number, and then this level here of 408 we can even assume 4 because it's just it's a psychological number and there is some congestion there. It's trying to do another VWAP bounce now. It gave quite a few of those this morning. So basically the way we trade is we wait for either break above resistance or bounce on support. I spoke about bounces, in a few of these, but I just think it's so important to talk about it again, just to clarify any further confusion people may have. So let's say this stock, right? It bounced here in this EMA 50 line. This is a beautiful bounce. So we can say if it starts dropping below VWAP that we want to grab the next bounce on EMA 50. What that means is not that we're going to automatically place a buy order here and get filled no matter what happened, because the stock can touch that level, not find any buyers, and just completely drop down, right? Fall into oblivion. We want to see a bounce there. And the reason why this setup is called a bounce, imagine basketball. And imagine that you are, let's say, on a balcony 10 feet up, and you throw this basketball down, and as it falls on the ground, it bounces back up. That's what we want to see, right? We want to see a stock drop to this floor when you throw it from the 10th floor and then bounce up. So then you don't buy right here. You buy it on the way up. You want to see the confirmation. You want to let buyers come in first. You want to have the stock hit the ground. You want it to bounce, meaning reject lower prices, meaning buyers stepped in on this area, and then you follow the big buyers. That's the only reason why we look at these levels. We're not looking at them to predict the future and say, oh my God, when it gets there, it's going to bounce, so I'm going to buy it. No, we're saying I want to see what it does there. If it bounces, I'm going to buy it. Very important distinction. Very important distinction. We have this happen oftentimes with beginners where they don't really understand the concept of a bounce, so they just buy here when it literally just does this. You have to wait for the confirmation. You have to wait for the screen to flash green. You need to wait for these big orders to come through, and then you follow the buyers. This is, the buyers coming in on VWAP, so it's showing that it's bouncing on VWAP. So that is sort of like a confirmation, right? We also want to see increase in volume because we want to know it doesn't matter there's a lot of buyers. We also want to have more buyers relatively to the previous candles so that it has that momentum to push it up, right? So those are the things that we want to see when we trade bounces. And bounces could be trickier than breakouts because you could, have a lot of fake out action, right? And then a drop down, and then it hits your stop pretty quickly. But they could be a little trickier in that regard as opposed to breakouts. When you trade a breakout, it's normally a squeeze level, so as soon as it hits, it like explodes 20% in a minute. Which is why I'm a breakout trader. I like breakouts better than bounces, but I trade bounces quite often, especially when a stock is above VWAP. There's plenty of opportunities for bounce trades. And I use bounces a lot also to add to positions as well. And the way to just ensure you don't get stuck in a fake out, even though sometimes you can do everything right and still get stuck in a fake out and lose, but that's part of trading. That's where we have stop losses. That's where you manage your risk. But the way to ensure you don't get stuck in a fake out is to watch the increase in volume, watch the tape turn green, watch the big buyers come in just like we did, and then use that as confirmation to take the risk and take the trade. That's really how we trade bounces. For breakouts, if it's a break above a key level that could cause a squeeze, I do set up automatic orders, but most of the time I will still just set up an alert and have an order that I can drag down just so that I can make sure that there's enough volume coming in, because you could get faked out in a breakout as well. Excuse me. Still have that cough. This actually just popped on scanner, which makes me really happy because it's a stock that we have been trading in the past. It's a stock that traders know. It could definitely be the obvious stock today because it's not a busy day and traders are going to be gravitating towards something they know. I'm so sorry. My throat is really bothering me. Okay. And I've been talking a lot, so that doesn't help. Okay. Can actually do this. It's a little more clear on the 5-minute chart. Okay, so bounce on 508, break about 535. Those are the key levels. I could actually just set up a bounce on 508 right now, potentially. Go below. This excites me a lot. Because it's a known stock, so we know traders will be looking at it. And again, on a day like today, when there's not much to trade, probably everyone is going to look at it, which is great, because then the setups work out. The setups do what they're supposed to do when people are trading them. Just 1 second. And then this one, nothing really to see here. This one, I watched this one this morning. The float is large. I don't like to trade large floaters. This one has 190 million. That being said, it's obviously moving, so, it shows that it has potential to move, but I really don't like large floats. They're just so hard to trade. And then this level of support's been tested a couple times. I would potentially trade a bounce on VWAP, I want to say, because, hopefully maybe VWAP ascends and gets here by the time the stock consolidates and gets down there. Because this level by itself, it's been tested a couple times. So I don't normally like to get a third test of support, even though this test is a little shorter than this one. So you could maybe say it's one true test, but third test of supports are tricky. That's, the recipe for disaster. If you get a little fake out, if I were talking about fake outs earlier, on a third test of support, you get a little fake out. Short sellers love indecision. They see it, they, drag it down to a hold down. So it's risky. So VWAP bounce I'd take on this one, maybe because there's some room to high of day. There's a double top on high of day. So also a third rejection of high of day is another short setup. So, this one has one more push in it to determine whether it can move or not. If it gets rejected a third time, that's it. It's done for the day. So yeah, so maybe we can have a little trade like that. There's enough range, so let's see what the percentage is on that. Yeah, it's like 3.5%. We probably have a because if it's from WeWeb or a little more, yeah, probably like 2.5–3% trade you can squeeze out of this one. We know the stock too. Traded at some point. I don't have any very fond memories of it. Maybe it's a large float or something. I don't even want to bother too much because there's not enough volume yet for the day. And this is also a very known stock in the trading world, and actually a stock that has been very nice to us in the past. I wonder why it's popping on scanner today, because it doesn't seem like. Oh, it does have some news. Okay. Yeah, I mean, it's not, it doesn't have a lot of volume yet, but it is on scanner, and maybe traders will see it because they know it. Oh, this could be a little that cat bounce move. Oh, we like those. I've spoken about those in one of these mornings, but maybe I'll just repeat it real quick. A that cat bounce is a setup where the stock is gapped down because of some bad news, and then you have some buying happening after it's bottomed out. The buying is a combination from short sellers covering. So, if you started showing this here or here or here, it's time for you to take profit. So when short sellers take profit, that's buying momentum. When that buying momentum come in, buyers step in. There's people that like to trade reversals because it's happens to be oversold. They want to catch a quick move on the upside. There's people that are in the stock long term that are like, oh my God, what's happening? Let me average down. Or saying, oh my God, my favorite stock is getting beaten up. I'm going to throw a lot of money in it right now. So there's some buying there happening. And then that buying becomes above average. So it picks up the momentum scanner for regular traders like us who don't care about this long term, but see, that there's momentum that day. And then we jump on the train too. So normally there's a little bit of move. I only trade these in the first, pre-market, but then also like only the first half hour of the morning. Afterwards, they tend to start selling out again. But normally you can have a quick move, and it's normally a good move. So this one still has very low volume for the day, so it might not even set up anything for us. I obviously wouldn't trade anything with this little volume, but it's just something to be aware of in terms of a setup. A dead cat bounce is normally a quick setup, which I like. It's a reversal setup. It normally has a lot quicker resolution than other reversals. Nice. So here in this trade now, 5.2 would be an add. It drops down to 5.2. Also, what would be an add would be break over 1 minute flag. We see the previous flags have a nice resolution. Right now, break of 1 minute flag is break about 541. Candle just closed, so break about 541 is 5 minute flag. So this is actually how we trade all day long. So we identify the levels on the chart, and then as the stock is moving, I'll say I will add here on bounce of 5.2 or bounce on WeWeb or break above, well, depending on where this candle closes. Right now, break of flag is break above 5.4. This candle has 30 seconds to close. If it closes here, then break of flag would be break above this level of 535, which is also a key psychological level. I mean, a key resistance level that we identified before. So as new candles are forming with lower highs, the entry goes lower and lower. Basically, a flag break is just the first candle to make a new high. So the first candle to make a higher high than the high before. And we trade those. That's my favorite setup. I trade on a 1 minute chart. I trade on a 5 minute chart. The 5 minute chart is more volatile, normally, more violent of a move, better of a move. On a 1 minute chart, it could, be tricky, but I would trade it on this one. So now, there's this candle closed as well. Now break of flag is 535. If that flag break doesn't break, like let's say this candle closes with a high of 530, then flag break moves down to 531, etc. Just, the entry trigger moves as the price moves. And in Thinkorswim, when you do the entries, you actually watch the trade reviews that we post on this channel. You can see how easily you can move the order. Thinkorswim, this platform is Thinkorswim by TD Ameritrade. Someone asked me yesterday. So it's a great trading platform. It makes trading a lot easier and a lot faster. It's a little advanced when you first get it. If you're coming from something like Robinhood, you could think that it's very complicated, but you don't really need to use all the tools. And the most important tool is the active trader tool that allows you to manipulate the orders right on the screen, looking at the chart, and it's great. It's very helpful. Okay, so this one closed again with a higher 535. So now we have almost like a flat top, which makes break above 535 even more exciting because we have so much resistance there that if we break above it, we can see a big squeeze. Another thing to note, the longer it takes for it to break, the riskier the trades become, because short sellers, and I say this in chat room a lot, shorts love indecisions. Short sellers love indecision. So if we reject the level 1, 2, 3 times, this is where they destroy it, right? Because we're showing that we don't have enough power to break above them. So then they absolutely obliterate it, just like this. That's why it's so important to count the tests, right? That's why it's important to look at the screen. I cringe when I hear people entering trades and then walking away doing stuff. You have to watch this. Even if you have a stop loss should be worst case scenario. If you're in this trade and you see the third rejection, you get out. You close down for profit. Maybe not as high profit as you wanted because you didn't get to high of day. It doesn't matter. The stock is warning you that something's going on. Short sellers are stronger than long bias traders. So you just get out, wait for the next trade. The next trade here would be, we have this level, right? Bounce on 5-2, bounce on VWAP, or break of 1 minute flag, right? True break of 1 minute flag. This break we saw, it was like there wasn't anything happening with the tape. It was a rejection, right? That's what we expected them to destroy it. So we can wait actually now to see if it gives a bounce on this level, just to have like an explanation of what a bounce is, because we had a perfect explanation here of a fake breakout and short sellers destroying it on the third level. Yeah, and this is what you want to see, right? We are not seeing increase in volume yet. So sometimes, especially if the drop was very fast, because we know short sellers are stronger, sometimes I will wait for the next candle just to be sure. I'm gonna wait to make sure this candle closes above that level. This candle just closed. It closed above. So that's at this point for me would be enough for a bounce trade on this EMA 20. Granted, VWAP is so close, and sometimes you might say, oh, this stock maybe really wants to touch VWAP. But then if it's a really hot stock for the day and you don't want to miss it, sometimes I will take this with a smaller position to allow myself to add on VWAP bounce, or even bounce on this level that we identify 508, because they're so close, and you can say to yourself, it might want to test them, but it might not, so I don't want to miss it. I saw what I wanted to see. It closed about EMA 20. I saw a lot of big buyers. Maybe I'll just enter, right? This one's actually, like, at this point even struggling because it's rejecting the 5-2, which is the key level of support from earlier. And you guys know when we trade, broken supports become resistances, and broken resistances become support. So this one was resistance, broke above it, tested as support, now we broke below it. It's serving as resistance. So sometimes also when I trade bounce trades, I sort of combine the first 1 minute candle to make a new high with that as well. And I think we spoke about this a couple days ago when we were explaining bounces. You can also just wait if you're not sure what's happening on the bounce here. You can wait for the first 1 minute candle to make a new higher, or break above this key resistance level to make sure you can get stuck in a fake out. That's a valid bounce entry as well. It's what I call paying for confirmation when you enter even higher than you would in a bounce, just to make sure that you don't get stuck in a fake out. But regardless, for either one of those entries, the stop should be below this level of support. You want to give it room to move. And there it is. So at this point, like, that's what I would take profit, right, on the bounce that we said we would be taking here on EMA 20. That's where you take profit on the break above, take partial profit on the break above, just to make sure, because short sellers could be defending their level. And then at this point, you could also lift your stop above your entry and sort of just not have any risk left in the trade. There's obviously not stop losses in the pre-market trading session, so it's a little more difficult because you'll just have to watch it and exit manually if it goes below a key level that you would want your stop loss to be at. But at that point, that's when the pre-market will even more aggressively take profit. so we can ensure that our capital is protected. And now, once it broke above this level, like now it becomes an easier trade, and then at this point it's like now fighting this 525, which is a psychological level. So if it does break above 525, what I would do is then I would lift my risk above 520 for the rest, and then obviously take partial profit and then do it like that. And then I break above 535 is where I can add more to the position. But that's how we trade this basically. That's it. And you guys actually got to see a perfect bounce. I hope this helps people to understand how we trade bounces. Okay, so I'm going to close the screen here, go back to the chat room, and happy Halloween, you guys. Be sure to check the Halloween special and take advantage of it, and talk soon.